Lastly, we're looking at their Africa exposure. Now, this is an interesting one. Does Pick n Pay have Africa exposure?
Yes, the one that I wanted to talk about was Woolworths. I'll give the Pick n Pay to Chris this time.
Well,
but
let's stop you and let's talk about Pick n Pay's Africa exposure, because you were nodding while I asked the question.
No, Pick n Pay has been in Africa for quite some time, and notably with TM Supermarkets, which gradually is changing the name to Pick n Pay in Zimbabwe. But they've done particularly well in Zambia recently. They're in Mauritius. They're getting into Africa in a much bigger way.
So in a SADC environment, right?
Very, very much so, absolutely.
Because I certainly haven't seen anything in East Africa or in West Africa.
No. That may come in years to come, but they're going at probably a faster pace than most people realise.
Well, Paul, now you can go ahead with Woolworths Africa expansion.
Well, conversely, Woolworths in some sense has been, for me anyway, slightly disappointing in Africa. I was recently in the Woolworths store in Maputo, where they had no fresh foods whatsoever. So it felt a bit like strange. The clothing side of things they had there, and I guess that makes sense because that's the stuff that you can have longer lead times in terms of delivery. And I think it is very tough for them to get milk and lettuce on the shelves with the same quality spec that they want to have in a place like Maputo with logistics challenges. So I don't think you would necessarily buy Woolworths as your first port of call for this element of the thing.
Do they have any Africa exposure other than Maputo?
Well, they've got stores in places like Botswana, certainly. That's been a big market for them.
So again, it's a SADC footprint?
Yeah, and then, as I say, they've gone clothing as a sort of first foray into some of these other markets, and I don't know, maybe they're going to see how that goes. It could be something for the future.
They do have in the Middle East. I've seen stores in Dubai, for example.
Okay.
Yeah.
No, well, now we're going to talk about Middle East exposure.
Better go there
does
too.
Pick n Pay have any Middle East exposure?
No.
So Pick n Pay really limited to SADC.
Yes.
Right, so who's edging ahead here? It sounds as though they're quite poor, both of them, on their Africa exposure.
So perhaps this wouldn't be. I think if you were looking for the Africa growth story, you would either be in ShopRite or you'd be in Massmart.
But as I say, I think Pick n Pay is going faster than we realise, and they've got some nice joint ventures in Zambia, for example, so I certainly wouldn't write them off, and I think they're taking a lot of those funds that were previously tied up in Australia and using that to expand into the rest of Africa. So
you're giving the Pick n Pay the
I'd give Pick n Pay the edge in the rest of Africa, yes.
All right, so now we're looking, let's take a moment to look at valuation, and Paul, perhaps let's kick off with our graph on Woolworths, which is behind us at the moment.
Well, this is interesting because a couple of years ago, well, maybe not a couple, but like 5 or 10 years ago, these two companies would have been considered as equals. In fact, in some senses, maybe even Pick n Pay would have been seen as the preeminent retailer. Yeah. But that's definitely changed. Do you remember your numbers there? 20 billion rand market cap Pick n Pay, share price goes sideways. Conversely, Woolworths has been on fire in recent years and is now sitting with a 60 billion rand market cap, 3 times larger. It is priced for growth, there's no doubt, with a 23, 25 or whatever it is price to earnings ratio. It's gone a bit flat and sideways this year.
It is priced for perfection, as we say.
No, 30 or 50 times PE is priced for perfection. 23 is still considered a bargain these days. 23 not priced for perfection? No.
Nope, I don't think I agree with Paul.
I back down.
We have a couple of stocks, Pick n Pay and Massmart, which are significantly higher than Woolies.
All right. So you think that this one can go higher?
Yep.
I think it's going to grow its market share. It's delivering in some of the laggard sections of its business. And when I say it wants to grow its market share, it's not just looking for sort of business as usual. Ian Moyer wants to really seriously increase the store footprint. So they're committing big space in new malls, larger space, in order to take market share away. You
mentioned Pick n Pay's gone sideways. Let's have a look at that graph and do a little analysis on what's happening on that front. Well, there we go, Chris. It's over to you.
No, it's been a dismal performer in absolute terms. It's gone pretty much sideways. The worrying thing about Pick n Pay is the extremely high valuation. 38 times for a company whose earnings have been declining for the past 3 years. I mean, it's difficult to actually discern why this is happening. It's one of two reasons, maybe even both. One, most analysts out there are looking for a really profound turnaround coming in a relatively short space of time, which I don't think is going to happen. I think it's unfair to put that kind of burden on one person's shoulders, i.e. Mr. Richard Brasher.
The new CEO has only been in the job for 3 months.
That's right. I think he's right. He's very realistic about what's going to happen. I think he's a great operator, and I do have confidence that it will happen, but I think the timescale is going to be much longer. And secondly, there's a possibility that we may see some corporate action here.